Hello guys and welcome to a new video. In today's video I'm going to explain the one shot one kill ICT trading model. This is one of the models that I use to trade US indices, and I will explain it through an NQ trade execution of last week. But before we are going into it, if you like my content, I would highly appreciate it if you smash the like button on this video, and if you like it even more, make sure to subscribe. But for now, let's hop right into it. On the left hand side of your screen, you can see the trade that I took last week, and on the right you can see the trading model itself. It is framed around the economic calendar. We need to hit a high time frame key level. We need to implement SMT. We are going to anticipate where the low or high of the week is likely to be formed. We are waiting for an M30 or an H1 change in state of delivery, and we are going to target opposing liquidity in this case. The entire model is going to be explained in detail throughout this video. As we have said in the trading model, the economic calendar should be the roadmap of your trading week. When we are trading the one shot one kill model, we need to focus ourselves on high impact news events and anticipate on this afterwards. Every week consists of different news events, so we need to see where the most impactful news event of that specific week is happening. And when we look at the layout of the week, we can see that on Monday we did not have any news. On Tuesday we did not have any news, so we should avoid trading those. On Wednesday we had the first high impact news event in the form of FOMC meeting minutes, but those are not that impactful as the regular FOMC statement. On the Thursday, this is where the highest impact of the week was coming from, with the unemployment claims and the flash manufacturing PMI. So through weekly profiling and the economic calendar, we were going to anticipate the high or low of the week being formed on the Thursday. And afterwards we can get into the right trades when we get the correct confirmations. Now that we went over the economic calendar, we need to cover the power of 3. But what is it actually? Well, the power of 3 stands for accumulation, manipulation, and distribution. And that is defined through the open, high, low, and close, or the open, low, high, and close of a specific candle. With the PO3 principle in combination with standard deviations, we can determine key areas as our targets or as potential reversal points. The -2/-2.5 standard deviations and the -3/-4 standard deviation levels are key projection points for targets or as a potential reversal point. So in conclusion, what will this say? Well, let's refer back to the economic calendar. We know that on the Monday and on Tuesday we did not have any news events, so we expect price to be in an accumulation range. Wednesday onwards we had high impact news, so we anticipate price to manipulate, and that is where the standard deviation levels come in, because these are the areas where we can look for potential reversal points. Afterwards, when those key levels are hit and we had that manipulation higher or lower, we can wait for the change in state of delivery to target opposing liquidity. Keep in mind that price is fractal, so this could be applied towards multiple time frames. When we take a look at the power of 3, we need to have time frame alignment to determine how we should map out those standard deviation areas. When we are considering the monthly PO3, we need to look at the 4-hour time frame. For the weekly, we need to look at the 1-hour time frame. A daily power of 3 is for the M15 time frame. And for the H4 PO3, we look at the M5 time frame. So for a PO3, we need to have certain time frames we need to map out those standard deviations on. In today's video, I will be covering the weekly PO3, so we will be mainly looking at the 1-hour time frame. But before I'm going over the explanation of the trade itself, I would like to say that Trader Luke and I started our own Discord server. It is named TDL Trading, and this is where we are going to mentor you towards independence in your trading. This is where we share our trades, we do live streams, we do live funded challenges, and a lot more. This is also the place where you can see how I've managed and executed the Nasdaq trade that I'm going to cover in a bit. If you want to join this Discord server, make sure to check out the WAP link in the description down below, and I will hopefully see you soon. So let's go over the execution then. This is the daily chart on NQ, because first off, before we are going to trade, we need to create a bias for our setup. Well, and when I see these daily candles, we can see that this was the Monday, this was Tuesday, and this was the Wednesday. So we are creating a bias for the Thursday itself. And what we can see is that we are only trading higher since the weekly opening price. And also something that is noticeable is that we have a devil's mark created right over here at this daily candle, because we do not have a lower wick on the Monday candle. So that taken into consideration, and with the high impact news events that are coming on the Thursday, I anticipate the Thursday to create the high of the week to anticipate lower prices going for that devil's mark level. The other thing that we needed to implement throughout the model is SMT. And on the left hand side of your screen, you can see the Nasdaq chart, and on the right hand side of your screen, you can see the Dow Jones. And what is noticeable is that from the Monday onwards for the Nasdaq, we were trading higher, but for the Dow Jones, we were trading lower. That is our crack in correlation, and that is the SMT implemented within our model. So now let's zoom into the 1 hour time frame, because we are looking for a weekly PO3, so we need to consider the 1 hour time frame to project our standard deviations area. And when we take a look at the price action, we can actually see that on the Monday and Tuesday we had a period of sideways price action and accumulation. Eventually we started to trade higher, and on the Thursday, with the high impact news event at 8:30, we manipulated into the -2 to -2.5 standard deviations area. And this is the area where we are going to anticipate the reversal on, and we anticipate this to be the high of the week. However, just because we are anticipating something, that does not immediately mean that we are going into a position. No, because we need our change in the state of delivery on the M30 or the H1. And when do we have that change in state of delivery? Well, when we are closing below these upwards closing candles convincingly, which we are doing right over here, we have our order block being formed and our change in state of delivery. So what do we want to do? We want to wait for a retracement higher and sell into this order block. What can we see? Eventually we did get the retracement into the 1 hour order block, and this is where you want to start selling from. We are anticipating the high of the week being formed, so you want to place your stop loss above this high, and you want to target opposing liquidity, which we can find in the form of sell side liquidity underneath these equal lows. And what can we see? Eventually we got ourselves down into the sell side liquidity, and the trade was a success. And that brings us to the end of the video. Again, if you like the video, make sure to smash that like button, and if you want to see more, make sure to subscribe. For now, enjoy the rest of your day, and see you until next time. Bye bye.